Good day, listeners. Today we present a comprehensive analysis of the 6-month stock outlook for one of South Korea's leading companies, Samsung Electronics. Samsung Electronics holds the largest market capitalization within the Kospi Index, making its stock movements a crucial indicator for the overall Korean stock market. With the inauguration of President Lee Jae-myung's administration, expectations for government support and a global semiconductor recovery are rising, fueling positive sentiment towards Samsung's future performance. However, ongoing U.S. export controls targeting China and the intensifying global semiconductor competition also pose significant downside risks to Samsung's earnings and stock price. Let's begin with the optimistic outlook. Institutions such as CLSA and NH Investment and Securities forecast that Samsung Electronics will see a recovery in earnings beginning in the second half of 2025. Rebounding demand for memory chips and the anticipated certification of HBM3E high-performance products may help the company reestablish its position as a global technology leader. Currently, most analysts set a target stock price between 72,000 and 75,000 caboles, implying an upside potential of approximately 20 cents compared to the current share price. These positive signals are likely to boost investor sentiment and attract renewed market interest. However, a more cautious perspective is also present. In Q2 2025, Samsung's operating profit dropped by 56% year-on-year, mainly due to export restrictions and supply chain delays. Morningstar, a global ratings agency, has expressed a lack of confidence in short-term recovery, warning that downside risks remain significant. Some analysts have revised their target prices down to 48,000 kolobos, suggesting a potential decline of over 20% from current levels. Additionally, competition from SK Hynix, Micron, and other industry peers, combined with China's push for domestic semiconductor development, adds further uncertainty to Samsung's outlook. In summary, over the next 6 months, Samsung Electronics stock faces both upside potential of 20% and similar downside risk. This reflects a complex landscape where bullish and bearish factors coexist. If memory demand rebounds and innovation progresses smoothly, the stock could challenge 75,000 KRW. Conversely, continued export restrictions and intensifying competition could drag the stock down to below 48,000 KRW. Accordingly, the following investment strategies are recommended. 1. Establish clear stop-loss levels and portfolio rebalancing rules, especially for investors heavily exposed to Samsung Electronics. 2. Diversify across multiple asset classes, including defensive stocks and global ETFs, to mitigate concentration risk. 3. Closely monitor U.S.-China policy developments, along with Samsung's earnings reports and product milestones, as they will likely influence short-term price movements. That concludes our analysis of Samsung Electronics' stock outlook. In a market environment where uncertainty persists, rational decision-making and disciplined strategy remain the key to successful investing. Thank you for listening.